In March 2000, $5 trillion vanished from the global economy, not slowly, not over years. In 18 months, it was gone. Companies that had never earned a single rupee, a single dollar, that were worth more than Ford, Boeing, and General Motors combined. Then they were worth nothing. And the strangest part is this: the crash didn't destroy the internet, it built it. Most people assume the dot-com collapse was a story about greed. Stupid investors throwing money at stupid ideas. Pets.com, Webvan, Boo.com, companies burning cash like it was kindling. But that's not quite right. Because underneath the wreckage, something extraordinary was happening. The infrastructure built during the bubble, the fiber optic cables, the server farms, the logistics networks, the payment rails, survived the collapse. It just sat there, waiting. And the companies that exist today, the ones that shape every hour of your life, were built on top of it. This is the story of the most productive crash in economic history. In 1995, a 24-year-old named Marc Andreessen helped release a web browser called Netscape. Within 16 months of going public, Netscape was worth $2 billion. It had been profitable for exactly 1 quarter. That single event sent a signal to every investor on Earth. The rules had changed. Profit didn't matter. Growth did. Eyeballs did. The future did. Between 1995 and 2000, venture capitalists poured $300 billion into internet companies. The NASDAQ index, and where most tech stocks traded, rose 400% in 5 years. A company could add .com to its name and watch its stock price double overnight. This wasn't just speculation. It was a collective hallucination, and everyone was inside it. Then, in the first weeks of 2000, something shifted. The people who knew what they were doing quietly left the room. The large institutional funds, the ones managing the retirement savings of millions of ordinary people, began selling. Not loudly, not publicly, they just stopped buying and started leaving. And when institutions that size move, the market moves with them. The ordinary investors didn't see it happening. They were still buying, still believing, still telling each other this time was different. It wasn't. By the time the collapse was visible, it was already over. The people who got out first lost nothing. The people who arrived last lost everything. That's not a market crash. That's a transfer. 9,000 internet companies shut down. Hundreds of thousands of people lost their jobs. Billions in personal savings evaporated. The city of San Francisco alone lost 26% of its jobs in 2 years. But here is the thing that nobody talks about. The cables stayed in the ground. During the bubble, telecom companies had spent $1.6 trillion laying fiber optic cable across continents and ocean floors. When those companies collapsed, Global Crossing, WorldCom, 360 Networks, the cables didn't disappear. They were sold for pennies. And the companies that bought them, quietly, got the world's most powerful communications infrastructure at a fraction of what it cost to build. By 2003, bandwidth was almost free. That's the moment everything changed. A 23-year-old named Mark Zuckerberg launched Facebook in 2004. He didn't have to build global infrastructure. It already existed. A startup called YouTube uploaded its first video in 2005. Amazon, which had survived the crash on fumes, used the cheap logistics networks to build AWS, the cloud system that now runs a significant portion of the internet you use every day. The bubble didn't waste the investment. It transferred it. The people who paid for the fiber optic cables lost everything. The people who arrived after the crash and found those cables already in the ground built trillion-dollar empires, which raises a question that should make you uncomfortable. Every technological revolution in history has followed this pattern. The canal boom in 1840s, Britain. The railroad crash of 1873. The electricity speculation of the 1920s. In every case, the infrastructure outlived the collapse. The people who funded it were destroyed. The people who came next inherited the world they built. So who is building the infrastructure today? Right now, AI companies are spending hundreds of billions of dollars on GPU clusters, data centers, and energy infrastructure. The valuations are vertical, the losses are enormous, the promises are total. You've seen this before. The question isn't whether the crash is coming. The question is what will be left in the ground when it does. And who will be standing there to pick it up? The dot-com crash didn't destroy the future. It just decided who got to own it. And it turned out, it wasn't the people who believed the hardest, it was the people who arrived after everything had already burned.